one, go.
Hello, Warriors. We made it through the week. A lot of central banks and really did not have major impact. We've had really quiet ranges. The best thing I could say about equities is they held, but they're under pressure today. It still is an inside week. It's not the finish I was looking for, and then looking for upside follow through. If the market breaks, for now, I guess it's going to have to go without me. I didn't lay out anything yet. You never know by the close. The only stock that really got the kind of lift towards resistance and really didn't complete, in my view, was NVIDIA at 130, and Apple couldn't even get back to the 220 breakdown. But let's get to the charts. I was waiting for the, here we go. Get my stream into this. And now it's chart time. Okay. I really think that the most major event, I talked about this resistance. I thought there was a chance we could get through it, but I said, above it, you're long, never close above it. And now we're playing with this uptrend line. And we keep getting little hammers here, which tells me, yeah, we're at the bottom of the range. But I think that the Fed saying that they were going to really draw down on QT by quite a bit. So, in fact, QT is pretty much over. All right, that's what the market got the lift on. Market needs more. I happen to be in the camp that the Fed is already way behind the curve as far as easing and trying to cushion what's happening with a new regime change, not just in the White House but in trade, in many different aspects of life in the U.S. So that there's going to be some turbulence, and the S&Ps are reflecting it today. In fact, where are we right now? Yeah, right here, 56.15. So I still think that there is a possibility that here, first of all, here's the inside week. Okay. So that's neutral. Okay. Right now, it looks like, we're going to just take out last week's lows, but an inside week is an inside week. The most bearish thing the S&Ps can do next week is to take out this week's high, 57.27. That's over 100 handles from here, and then take out this week's low. The most bullish thing the market could do is start off lower and then start closing back over the highs that we had at about 740. This bounce was not even 38%. Okay, so it was a pretty feeble bounce. When you look at the decline we had and you look at all we've done is not even be able to retrace 38%, but we could still have something like this where maybe it'll stretch out past next week, where you pull back and then you get one more run. That's what I'm thinking is going to happen in the S&Ps. So let's move back to currencies. So I've been long the dollar. I had people buy it at 103.10, had people buy it at 102.85 on a 3 drive, and here we are. Let's look at the weekly. Probably just a little hang week, and you could tell there wasn't really a lot to make. But look, we're getting a little reversal candle and almost a 2 week reversal, 103.53. Interesting. Okay, now we are. If we close here, you have a 2 week reversal. So, I've taken some partials, but I still think we could go to 104.80. Maybe that's that week. It's next week on, I don't know, maybe there is still safe haven buying. I'm of the mind that dollar weakness is no longer risk on, that almost dollar stability is what you need for the markets to stabilize, which is just a factor of money flow. money leaving to buy foreign assets, being repatriated, weak dollar, and at times the ebb and flow of money coming into the dollar, which I think would stabilize U.S. denominated assets. So still looking for a bounce here. I really think that when Besant said that they were going to focus on the 10-year, that was really a message of, yeah, let the market, let the economy suffer. In fact, we need that to happen to get the long-term 10-year yield down. So, we've had 10%. It's my contention it's going to be more than 10% before it's over. Still think there's a shot for 4,900 in the S&Ps. So here's the euro pulling back. A little bit of a reversal week, so it sets the stage for buying buying it on the pullback. So if I'm right and we have, say, another 100 pips, that would take it down to, I think that we could see 107.28 is only 28% pullback. So I'm looking for a bit more. Why can't we pull back to, 107.30 then 106? So I'll probably start scaling, but I'm going to take my cue off when I get out the dollar. I'll see where the euro is. Something that I think is a lot of people might get caught in. I talked about that the Canadian, it never broke with the dollar. If we take out this level, we're headed to new highs, and also the Aussie weakness, which is becoming more pronounced. And tell you what, guys, when I look at a daily chart on the Aussie, it doesn't really look that good. I mean, next support 62, and we take that out, I think we could be challenging the lows again. So the commodity currencies really look to be the weakest against the dollar. Let's cover gold. It's down 20. People are asking Dale, or should I be short gold? I think that we're getting closer now. This is what we needed. We needed a pullback first so that the 4-hour RSI on the next rally attempt will stay under 70. Okay, so I'm preparing for the next time gold bottoms and say we take another run at the top, whenever that is, and the RSI stays below 70 with price making new highs, and this would be the second, really the third divergence, but only the first one under 70. So I'll be looking for that. Really, you're not going to know you have something more significant until you take out 29.20, 29.60. But shorter term, this level that we're at right now, 30.20, is going to take us down to maybe 29.80, and we make another run, or people buy the break at 3,000. But I'm going to be stalking this for a top pick. Next time after this pullback, gold attempts new highs. So this surprised me, but a little stronger than I thought. The gold silver ratio's making another run. And we have to talk about WTI. Okay. So I'm hoping it accommodates. And I think there's a short, there's one more low down to about 62, take out 65, 68 is 3, takes it down to 62. So for the last few interviews, I've been talking about the fact that I believe there's going to be a military strike against Iran. And, I hate war, but I believe that's going to happen for a couple of reasons. It's been Netanyahu's mission um, for a long time to prevent Iran from having a nuke. President Trump believes that they're behind the assassination attempts of him, and he's not going to just let that go. And I think part of his trip to Saudi Arabia was not just the Ukraine deal, but talking to the Saudis, that this was something that was going to happen. And so he's giving a 2-month ultimatum to Iran. We also sanctioned a Chinese refinery for taking in Iranian oil. So the seeds are being sown for what I don't believe is a bluff, just like people thought tariffs were a negotiating tool. I don't think it's a bluff, and I don't think Iran's going to be intimidated by or fold into a 2-month ultimatum from President Trump. So the ideal scenario for me is for us to have new lows coming in sometime in, the next month or so in April or May. And because, I don't know if it's going to go to 100, but from 60, it could go back to 80. I'm just trying to be reasonable and not uh, hype things up, but I think there's going to be a buy after this break. If you're bearish, I think this, is not a bad place to short it for that break to new lows. Here's my weekly. But now we have something else hanging over the market, possible Middle East action. Pretty negative week in crude, so looks like a flag to me. Also on the weekly, look at this. It's confirmed down here, maybe not here. Now, if we get a break to new lows, I think we'll put in higher RSI lows on the weekly. So a lot of, even though it was a quiet week, it's setting up a lot of things. I hope you've had a chance to, come into the room. That's where I post and Mike posts and you post, and just it's free. Just go to www.tradegatehub.com and check it out. There's a lot of great information from Mike. Here's Mike and all his research. Plus, we get all kinds of news. He curates an X list of some of the best guys out there. Pays attention to call buying, call action for market tells on which stocks are getting the love. So, invite you to join us, and perhaps if you're trading anywhere and you like what we're doing for you, you could consider an account with TradeView Markets. So most of all, a lot of trades setting up. Um, I'm hoping that the S&Ps don't completely collapse. They're trying to bounce a little bit here, and that eventually we do get at least a 38% sell-off. More people looking for halfway, and it's possible. There sure is a lot of confluence at 5,900. We'll see. So that's a wrap for me, everyone. Remember, don't just count your pips, count your blessings.